Welcome to TradeTheMBI.com. This is John's Reports for the 28th of March as we end the month. Well, we've been in nonstop go mode here for the last couple weeks. Everything's been leveling out and moving after the drama of war issues, sanctions, and the continued press towards that. None of the news is positive coming out of any of that side of it. And troubling, is a different story about, what the currencies are going to do and how they're going to handle the coming disruptions to food supply and things like that. Those are issues the market is really not that focused on at this particular point, given the fact that the expectation is the Fed is going to step in and take care of everything. So as long as that proves to be the case and is believed to be the case, the market should continue its press higher. There's just nothing stopping that. It's only when that dynamic changes and the numbers start coming out that suggest the economy is faltering, not just slowing down, that becomes the real issue of transitioning from being optimistic that the Fed is going to take care of everything versus, we may not actually even stay out of recession side of things. So, of course, we're going to see it here with the DOC as well as for the MBI reading here. Magenta dips below the yellow. We get below that 33 level. This particular point still riding high above that. And from a DOC standpoint, we've had plenty of weakness. So the fact that we've held up pretty well within this weak setup here with steel moving below cyan and really strong activation of shorts but getting absolutely nowhere. So that always is a recipe to fuel future increases. From an NQ standpoint, relatively the same. Looks almost identical from a chart standpoint. The continued rise of shakeout in that all bodes well from that standpoint. But as soon as it starts to falter, and we'll most likely see the transition from an intraday standpoint before it shows up on the daily. From a Euro standpoint, again, there's nothing about the Eurozone. In fact, the Eurozone is far worse shape than many realized, and it's becoming more evident how unsustainable the EU system at its current configuration is just going to continue to deteriorate. They're trying to promote moving things back to normal, but there's still a lot of restrictions and hesitancy in place that it certainly isn't going to help with this energy situation because it's so dependent upon those foreign sources of oil. And from a gold standpoint, gold's going to be back and forth within this kind of configuration. It's still going to trend higher overall, but it's not going to be a one-sided event. We knew that when we started seeing positive extremes when we had the first run-up, and it was likely that those would fill, and we're still within weak configuration at this particular stage once they pivot lower with white leading. The advantage is you've already got a steel reset, so it wouldn't take much to turn it around, but problematic with the ban of Russia from gold. The supplies are limited from that standpoint. There's going to be probably record demand from central banks, so it's going to be a dance for them to try and keep it low enough to hold on to and still acquire. It's not going to be the case in other things because as you look around the globe, you're realizing that having foreign reserves and other things like that can just be instantly taken by governments without any real legal action, terrifying for markets. And so you're going to see cross-action trades in actual commodities, like in this particular case, oil, still maintaining its elevated status, simply because you're just limiting your own supply capabilities at the same time. Demand is still holding up. Now, if the demand side fails because of recession and that, well, that will ease things off some, but there's really been some systemic issues created with this whole boycott and embargoes. And of course, we know that's excellent for cryptos. They're going to skyrocket. And, well, now we're down to 128. I mean, gosh, it was we're up here in the mid-40s up here. We kept saying that, I was expecting to move down towards 125 range. Getting closer, and that's just that ebb up of the creep of rates. And even regardless of whether that the Fed eases and that rates are still going to continue to rise in some of the high side situations, simply because market participants are going to demand it. Otherwise, they're just going to move towards cryptos, which is exactly why we're seeing them move. Bitcoin, from its rally that we saw, actually, we can look at the daily of it. It would probably be easier to see because we saw it building from here when we crossed over. Took place right there, 1695 to 1683, the magenta over, and hit the 50%, and from there it's been a nonstop rise, falling 100%, so reaching the 100% mark. Not a shock with any of that. And from a DOC standpoint, straight up with green over red, and red continuing to rise now, with zero in that, shakeout, perfect. Getting into an extreme here, so this will likely retrace itself, but nonetheless, it's just an indication that that demand side for Bitcoin, Ethereum, and maybe even a few others are going to just continue to climb because there's no alternative for now an entire section of, so 140 million Russians, if they're, any portion of them are dealing with business outside. But also you've terrified enough people in various other countries, Canada, for instance. Truckers realized really quick how things can turn ugly. And so that's an important psychological shift, and I think it really bodes well for the crypto market in that sense, because governments have shown themselves to be dangerous when it comes to your assets. And that being the case, you've got to have an alternative in place. Now, of course, there's plenty of things they can do to limit that from the internet. And of course, we're not talking natural disaster or anything like that, which obviously if you have no internet, it doesn't do any good to have crypto. So obviously that's a great selling point for a mixed strategy. From a 50K standpoint, it was back and forth pretty much, but still ending on the plus side of it. From a 5K, we ended at the peaks. We had a couple of positive extremes that were inside of that setup. It filled those, but then post-market here, we've come down, took out the entire move of that late day pop, and jumped back up again early on from in there. But early in the day, there was quite a pretty decent mix of up and down action. It was moving quite evenly, I would say, and still well above our 4481, which was that previous algo level, and literally generating new setups here with positive extremes. And just coming back and filling in. So all the signals were pretty clear. There wasn't anything unusual about any of the action that was taking place. Nothing really on the dramatic side. We would expect more of the same. I think that you're just going to see this continued volatility. This is a little bit more normalized range, I think, but probably not going to remain that because if things continue to deteriorate from the rhetoric and war standpoint, I think that's going to put more pressure on the markets simply because of the uncertainty. And of course, nobody wants to bet on the doomsday because there's no point to even think about that, because should something like that take place, there's going to be a market anyway. So no point in trading that aspect of it. As always, though, if there's any relevant details in that, I will pop them up on the Skype chat. Trade well. We'll talk to you later.